Hello traders, welcome to the weekly outlook and setups volume 300. 300 Saturdays of showing up and having a look at the markets, how they developed this week, what kind of setups we had, and most importantly, try to draw some forecasts about what is about to happen in the incoming week. Hope you're enjoying these. Let me know, of course, in the comments. And right now it's time to have a look at the economic calendar and see what we're going to have for next week because we have some very key events. So without further ado, let's jump into it. On Monday, we're starting up with a couple of news. Here we have this manufacturing index, and then we have a speech from the ECB's president, bank holiday for Japan. Tuesday, we're having some CAT CPI. So if you're a CAT trader, definitely watch out. And then we have retail sales for the USD. But pretty much the massive highlight of this week is the Fed rate. And of course, the press conference. Now, the chance of the Fed cutting by 25 basis points is pretty high. It is already in the forecast and traders are already pricing that in. So of course the interest rate, when it comes out, it's probably not going to make as big of an impact. But then the press conference and what Powell says about the future of the Fed and then the cuts, that is going to really shake out the market. So if you have been, of course, watching the markets, which of course you are, you would spot that we're having an overall kind of a consolidation, especially on the weekly and the daily time frame. There are no follow-throughs, there is no momentum, there is nothing. So is the market waiting for this? Okay, a lot of it is already priced in, a lot of it is already known, but I feel like after the Fed rate this week, the market potentially could be breaking out somewhere. And then on Thursday, we continue a lot of red news this week. We have NZD red, Aussie red. Here we have GBP CPI, we have Euro red news. CAT CPI, so many news. Here we have the Bank of England rate. They're going to keep it the same potentially. And unemployment claims for the US dollar. And then we have even the Bank of Japan rate. Okay, so absolutely crazy week. I'm going to be trading. Monday, Tuesday, I will show up, see what a market wants to do. Monday, likely not. I really don't like trading on Mondays. Tuesday, I can show up, but knowing that Tuesday is before the most expected news event probably this week, I would also be a little bit mindful and be very fast with my profit taking. Then on Wednesday, I am not going to be trading before the Fed rate. And then pretty much I'm going to be full attention on Thursday and Friday to be capitalizing on the weekly move. So that is my plan for this week. Key attention to Wednesday. Fanatics, I spent 1.5 months putting together the Fanatic Bootcamp that is designed to help you exit the break-even stage with just 2 simple tools and 6 hours of content. Now, if you have been loving how I analyze the market in the weekly outlook, if you have been loving how I trade and how I think about the market, this is really going to show you everything that I do for an extremely small price. So we're going to be working on your mindset first, fixing your mindset, your limiting beliefs, and exiting your emotional cycles. Then I'm going to be giving you the 2 tools that I use, only 2 tools, so you're going to actually know what I'm doing in these weekly outlooks. And then of course, I'm going to give you the process and the mechanics for it so you can actually build it into a trading plan. So if you're interested, first link in the description, click on it, and I'm going to see you on the other side. All right, as usual, getting started with a DXY. So you know how I started doing this kind of reverse engineering thing where I actually start from the lower time frames to have a look at my forecast pretty much for the week ahead and see how the market developed, and then just very quickly flow through it to see how it actually developed, right? What kind of setups we could have had. And then of course, most importantly, I go to see what is happening right now. So pretty much we were in a formation of a daily imbalance that actually ended up forming, as you can see, okay? And this was my forecast for Monday to form a daily imbalance, and then eventually for that daily imbalance to get tapped and react. It kind of happens later on, but the development was pretty different. Okay, the market opened up. It had a very small hourly bullish imbalance, and I was like, okay, at that time, doing my morning analysis for the team, are we gonna respect that and drive us into higher, or are we gonna break it? And the moment we broke it, the bias was extremely clear. We were gonna take that liquidity. So I didn't trade on Monday, but my community took some beautiful longs here on EU, longs on GU, DXY shorts, again, with not trading the DXY. And then pretty much after we took that liquidity, you can see the market is not forming any sort of bearish imbalances. And then we actually invalidated. So if I delete the lines, we invalidated a new daily bearish down there because the market did not really continue to go lower. We swept below the previous daily low. And then pretty much the only area for the market to potentially stop was this unmitigated hourly imbalance. So after a previous daily low sweep, there was an amazing long opportunity here on Tuesday for the DXY, which is a short on EU and GU. And then pretty much getting into Wednesday, which was PPI, and then Thursday CPI, it got a little bit choppy. Now, of course, CPI tapped into that daily and rocketed the market lower. And pretty much right now we're getting into the more pretty much the current price action, where the weekly time frame is once again, everybody, let's remind ourselves that we are still stuck inside this candle. That is 6 weeks of doing nothing on the weekly time frame. So again, is CPI this week actually gonna break it out? Hopefully, okay. But then, of course, zooming in on the daily, we had that daily bearish imbalance. The market tapped in. We're having a beautiful rejection candle away from it. And then Friday also was an inside bar. So if I am asked, like, where do I think the market's going to go? I'm immediately going to say low-hanging fruit, previous daily low. And then, of course, this daily swing point, and then ultimately this old swing low there. Dropping onto the hourly time frame, what we actually did is we created a hourly bearish imbalance here, but Friday was extremely choppy. So we came in, reacted, came in again. So you can see, right, I'm always looking at the candle anatomy is what I call it. So I'm looking at the rejection candles, I'm looking at the respect, I'm looking at the breaks, right, of every single candle, okay. And you can see, for example, here, this candle breaks above the previous candle high, but it sweeps it. Then this candle sweeps, this candle sweeps, this candle respects, okay. So this for me right now is still the imbalance holding, okay, until I see a body closure above like a previous candle's high, which of course you can learn all about my imbalance techniques in the bootcamp that I just released. It's the first link in the description. Until I see an invalidation of an imbalance, which I have 2 invalidation types, you can learn these in the bootcamp, I am not looking for longs yet. So basically, I would say something like that. This is the short, of course, scenario for the market to break below that swing low, to continue forming new bearish imbalances on the hourly time frame. I will definitely short it. And of course, if the market kind of starts invalidating, it starts making 1 hourly bullish or even 4 hourly bullish, and it really breaks above, for example, this high. If we break above that high, that will be definitely a big confirmation that the market is about to shift, and then we're going to be targeting this week high. So as usual, everybody, if you have been watching me, you know that I always give scenarios, because this is how I'm profitable. This is how I believe the market operates. I don't believe in forecasts. I don't believe in kind of predictions. Okay, the market is going to go shorts on DXY 97.1, right? That used to be cool back in the days. Not anymore, right? After 6 years of trading, you realize that it has absolutely nothing to do with forecasts, has nothing to do with where the market is going to go. It's all about showing up, having a system, and really flowing with wherever the market actually wants to go, okay? Don't push your opinion onto the market. Don't push your analysis. Don't draw your lines and expect your lines are going to get respected. Just show up, listen to what the market is doing. It's always going to guide you to where it wants to go, not where you want it to go, okay? So with that little rant here, I'm ending the DXY. I am definitely more bearish because we have daily bearish imbalances, we have hourly bearish imbalances. Market structure is absolutely bearish, so I am definitely bearish biased. But of course, if I see the bearishness failing, I'm going to be the first one to long it into the low-hanging fruit of the liquidity on top. All right, XAUUSD, yeah, pretty similar development here. This one was really nice because we had that hourly bullish imbalance that actually formed on Friday. The market taps it on the market open, and it also did not make a new hourly bearish imbalance. So again, you can see the market immediately starts guiding you higher, and then pretty much within Monday, it completed my forecast, which is absolutely beautiful. And if I go to the 1 hourly time frame here, actually my community took GU. Because GU, as I'm going to show you in a bit, it had a 1 hour zone here to trade from. It was an absolutely beautiful trade, but EU also offered one right here. So you either get in right there, which is a little bit hard to get in because you don't have a zone, or you also get in right here towards the liquidity. Absolutely beautiful Monday trade. Nowadays, honestly, Mondays are a lot better than Fridays. So if you're looking to trade something, then better it be Monday. And then, of course, I was forecasting that a new daily bullish imbalance is going to form. And there it is. It ended up forming. We came in candle 1, then candle 2 on Thursday. CPI showed us a really nice sign of that daily bullish imbalance being respected. And this is currently where we are at. So, for example, we have these 2 highs. If I drop really quickly on the hourly time frame right now, we are a little bit compressed. We, for example, tapped. So we have these 2. It's not 5H, it's 4H. We have these 2 hourly imbalances here. The first one failed, so that one tapped in, and then it broke, you can see here, all right? So that to me is an invalidation, but then we still have that kind of as a second barrier, right? The second thing that can potentially hold price, and we tapped in, and so far it looks like it wants to respect it, okay? So in this case, I would be dropping to a 1 hourly time frame, okay? And I would be looking like for a 1 hour zone from here to potentially guide me into the highs. But again, this is Friday closure. You usually don't get that textbook price action at that time, okay? So I would say I am definitely more bullish on the euro. Now, of course, it's really going to depend on how the news are going to go this week, okay? But again, similar to the DXY, daily bullish, hourly bullish, market structure overall bullish, although I would say not so bullish. I mean, we were in a very massive consolidation here. And right now the market is kind of really trying to exit this consolidation. You can see if I put like a midpoint of that zone, this is exactly where the midpoint is. Like the market tried to break up, but then eventually it returned. It hit the midpoint of the consolidation. It's respecting. So this is kind of giving me a little bit of a sign that, hey, maybe we don't want to, for example, come back into that consolidation and start taking the opposing sides of the liquidity, which can absolutely still happen, okay? Which is when, again, I get to my flow with the markets approach, okay? If the market shows me bullishness here, closes above that level, prints new bullish imbalances, brings me bullish structure, I'm absolutely longs, okay? This will be, of course, my favorite setup right here with a hourly bullish imbalance above that swing point towards these highs. There is nothing to stop it. However, if the market decides to break below this low, okay, it closes below that low, 1 hourly or hourly bearish imbalances, then I will be guided towards this liquidity point first. And then if the market really continues with that pressure, that is going to open up all the liquidity points here within the consolidation. Because again, when the market really fails to go above this sort of zone, like this whole zone is like, think about it as a very big support level, okay, especially like the top. So if the market really doesn't stay above this top, meaning that if there are any buy stop orders here, and if there are any buyers, they would like to go into profit, okay? So they got into profit here, right now they ran in drawdown, they got into profit again, run into drawdown. So if they start getting into profit again, then very likely the buyers are going to prevail. However, if they get suffocated right now, so imagine that this is where they took a buy, okay, and maybe their stop loss is all the way down there. If the market really starts going against them, they're gonna just one by one start exiting it, and this is gonna potentially create an imbalance towards the lows, attacking all these liquidity points, okay? So that is the flow. I'm not forecasting the market. I'm not shouting it's gonna go there, it's gonna go here. No, I'm just looking at all the different scenarios. I understand the market, of course, so I'm always making forecasts, but I do them from a very detached point of view. So this is my outlook on EU. Let's see who takes control on Monday, and then of course we're gonna follow with it. But of course with CPI on Wednesday, I will just be very careful until the news event is out. Let's have a look at GBP USD. It was the relatively stronger pair this week, which made it a lot better for my community members to trade. Now, personally, I only trade GOAT. Right now, I'm doing a little bit of an experiment, but here again, you can see I gave you 3 potential scenarios. I gave you a scenario here where the market makes a daily bullish imbalance, retests the daily bullish imbalance, and then it goes. I gave you the most immediate scenario, the hourly bullish that had already formed, which is the one that actually ended up playing out. And then, of course, a reversal scenario. Okay, and we can see this scenario here, hourly formed, beautiful push here. The trade that the majority of my community took is that guy here. You can see that the market starts making higher lows. 1 hourly bullish imbalance taps in, bingo, into the liquidity. Absolutely beautiful trade. And then it just continued. It just continued to run for some more scale ins. Now, later on, there was a short from here on EU shorts and GU shorts, sweeping the previous daily high, giving us signs that the market doesn't want to continue. You can see like after this hourly zone held, which is I had some members taking this during Asia as well, pushing higher, okay, it doesn't follow through with a new imbalance. Now, what does that mean? If this push here doesn't make an imbalance, this is why I no longer look at structure. Okay, I do look at structure, but more in terms of macro structure. But if I zoom in, if this push here didn't have momentum, what is momentum? To me, momentum is imbalances, okay? Then that means that push is weak. What happens? It goes to take out the origin of that push, which is here. This is why when we saw the 1 hourly shift bearish, we went short into these lows, okay? And then after this, we kind of got into Wednesday PPI. PPI didn't do shit, all right? Just wicked up and then chop. And then pretty much CPI swept into the lows, expanded higher, and this is where right now we're getting into the current price action. So checking out the daily, we actually did create a daily bullish imbalance, but you can see GU is relatively strong. EU pulled back into the daily imbalance, okay? GU did not, okay? And GU right now is pushing away. So again, it's opening up these sort of liquidity levels here. Even this guy is a very good liquidity level. And on the hourly time frame, the hourly time frame is honestly a little bit sketchy, right? We did have these two imbalances. This one absolutely failed, okay? And then the market kind of came into that second imbalance, which is also where you're kind of having this sort of an order block area here, this last 4 sell candles before the very big buy. All right, a lot of it can drop like as a demand zone. This is where the market is tapping in. And what I also like seeing here is that on the bearish side of things, we're not getting a hourly bearish imbalance. We're not getting a bullish outside of it, but we also don't have a bearish one. So that is a little bit 50-50 right now, okay? Which immediately means that you can either drop to the 1 hourly time frame to really look into the signs, which are also not great, because you can see exiting out of that hourly, we don't get 1 hourly bullish as well. So pretty kind of a chopped up development here on Friday, okay? Which is why Fridays, again, recently they haven't been amazing, of course, if you don't have any peer or something like that. So my outlook is immediately going to be the same as EU, as pretty much, yeah, as EU and the DXY. We have a lot of GBP news, by the way, right now. So we have CPI for the pound, we have interest rate for the pound. So watch out, it might consolidate. But again, if I start seeing some bullishness, I will definitely love, by the way, to trade towards these liquidity points. So if these liquidity points get taken, I think that is going to be a lot of liquidity taken. Maybe we can initiate a pullback then, okay? Or maybe if we truly start closing above them, okay, with an imbalance above, then we can continue to go forward. Now, of course, it can also sweep. And if it starts looking bearish from here, then we can start shorting. You can see I have so many scenarios here, right? It can, of course, print bearish imbalance. You can go liquidity number 1. And if liquidity number 1 is broken with a body with an imbalance as well, then we can go towards liquidity number 2, okay? So these are kind of all the scenarios, right? We can break out above these highs and we can continue. We can sweep them and reverse and then attack the opposing side. Or we can, of course, start bearish, guiding us lower towards this low, because that low is actually weak, because it didn't really make any imbalances going higher. So it's a weak kind of push. And also this push here is still a little bit 50-50, because it does have the imbalances, but we're not seeing the response from them. So again, if I see first signs of bearishness, I can already forecast that this whole week, this whole push right now is getting weak, because its imbalances are not making a new high. So that is GU, a little bit more kind of complex, but I feel like with all the news that are incoming, it kind of got a little bit too chopped up. So I'm giving you again all of these scenarios, and all you have to do right now is show up on Monday and just wait to see what the market's gonna do. Sometimes, like last week, for example, we had that hourly bullish zone. I immediately said, right, longs. If this was a normal day, I would absolutely look for longs, because we had already a zone. Right now, we don't have a zone. We have kind of a consolidation, no zones are created, it's pretty 50-50, so we have to wait for the market to give us more clues. I no longer trade and look at Aussie dollar, but look at this development. That is a nice trending week. I think it did better than the majority of the pairs. So here again, we had these hourly bullish imbalances. We definitely could have continued higher from there, which actually the market did, and then we continued going higher. Or of course, as I said, if we start seeing bearishness and if hourly bearish imbalances, then we go towards the opposing side of the liquidity. But the market ended up developing pretty nicely bullish. Dropping onto the daily time frame again, we have these daily bullish imbalances behind us, kind of suggesting a little bit, hey, we're shifting a little bit more to the buy side. So are we going to exit all of that mess right now? Looking good. Maybe Aussie dollar is gonna start moving better these days. These imbalances are no longer relevant. We don't have anything on the daily though. This is something that I don't like. We are taking out a massive weekly liquidity right now, so we have to see, okay, is it gonna stay above or is it gonna sweep it? There is no daily zone to trade from, which is not amazing, right? We could have definitely made some sort of a daily zone to give us a lot more confidence for the longs, but we don't have it. So then we transferred onto the hourly time frame to see what we have here. Yeah, so we came in to sweep that weekly. We immediately reacted. We had the hourly bullish imbalance that the market tapped and responded from there. But that is CPI, so you wouldn't really trade that one. And then we created this hourly bullish that actually did its job. It tapped in, it took it, so that then becomes irrelevant. And the market, after it took the liquidity, it failed to impulse higher. So then this low becomes weak. And currently, actually, we have a little... Oh, come on, when they're so little, I can't even draw them. We have a little hourly bearish imbalance. Super interesting. Then, of course, we're going to have this guy That is pretty far away. And not 4H, 5H. We have also here this sort of a support level, right? You can call this order block, break-in retest, whatever it is. So, okay. A lot of bullish introduction. My key question is that gonna sustain? Okay. We took that massive high here. That high was maintained for like for 48 days. Okay. Now we took it and we're starting to stay above it. So I do like the longs. However, with that recent following bearish imbalance, it makes me think, okay, is it going to make some sort of a deeper pullback? And also the daily time frame not making any daily bullish imbalances also is a little bit sketchy, okay? So I'm not trusting it yet on 100%. Now, this is kind of a low probability pair because can I go long on it right now? Well, I cannot. Why? I don't have a zone. Okay, I don't trade these order blocks that much in these kind of support and resistance levels. I trade from imbalances. So do I have an imbalance to go long from? No. Can I go short? I could do a short like that, okay, but is this a high probability trade? No. Why? Because the market is absolutely ripping bullish. So why would I suddenly say, hey, this is the top, so let me start going short and attack these lows? No, I'm only gonna short if the market makes a lower low, lower high, and then it starts really giving me the signs that the market structure is shifting. Then I'm gonna short towards the liquidity. Okay, so that is kind of my AU overall outlook. I wouldn't really say that this here is a nice setup. I would say that if the market breaks strongly below that low, okay, and then it sort of gives us some sort of an imbalance here, then you can look to trade into this guy, for example. That is kind of a trade that I see, but that is a short trade I'm calling in an absolutely bullish market. But again, in order for me to take a long, then I will need to see this forward imbalance invalidated. So maybe tap in, kind of invalidate it, or tap, for example, react, break, and then I can start looking for the liquidity on top. So that is Aussie dollar. Looking really nicely bullish, honestly. I'm not sure if I can trust it yet, but again, it's looking pretty good. It doesn't have any zones to trade from, so all you can do is either look to short from that one or look for that one to fail and then give you an entry model towards the liquidity, which is an imbalance failure is actually an entry model of mine, and you can also learn it in the bootcamp. So let's see how this one is gonna play out. Let's have a look at the XAUUSD. Overall, pretty similar development to Aussie dollar. A very nice bullish week. Then we enter into a little bit of a consolidation. And then Friday, actually Thursday, CPI ended up popping higher as well. But of course, in terms of the forecast, I had two scenarios. One was just to see that forwardly bullish imbalance, the most recent one, hold and push us towards the liquidity. And then if the market really started forming imbalances above that liquidity, to potentially continue, which didn't really happen. We had actually an imbalance here. That imbalance got tapped all the way on CPI, so wouldn't really have traded. But here I remember there was already a setup developing. There was a 1 hourly bearish that the market tapped. It came into the hourly again, and then pretty much this here is your entry, like that. Stop loss below, and then you can be looking to hold it going higher. So a pretty nice Monday trade here. Not always we're going to be getting these very clear setups at the market open. So going on to the very recent price action right now. So what is really nice actually is that we had a daily bullish imbalance here on XAUUSD, okay, and that is what potentially pushed the market higher. So we're having this liquidity point, and right now we're having this high as well. Going on to the volatile time frame, this is where it kind of gets a little bit tricky because we had a bullish imbalance here, but that one is already failed, and right now we have this guy, this volatile bearish. Why do I keep typing 5H, 4H? And we're tapping in. All right, we're tapping in, and then we have this very, very, very small reaction area here that the market could potentially react from. So again, a pretty tricky here. I'm overall bullish on this market, although this daily imbalance has done its job. This forwardly bullish imbalance also did its job. There we go, tapped in, reacted. Right now it's failing, so I'm not gonna look for it anymore. And right now we're tapping that forwardly zone, and we're giving a very nice rejection. So I can say like something like this. If this is a normal day, I would definitely expect something like that because we have that bearish push with a forwardly bearish imbalance. We're seeing the signs of failure. The market could come in to take a little bit of liquidity below here and then tap into this reaction area. And then from there, I'm going to wait to see how it's going to react. Of course, we can invalidate that forwardly bullish imbalance. And if it gives us bullishness, then we can drive towards liquidity. We can sweep that low here and then give us some bullishness for the longs, or we can invalidate that low, print forwardly bearish imbalances, and then guide us towards this liquidity. There we go. Three scenarios immediately. Again, do I know which one is going to happen? Absolutely not. But as I keep saying with every single pair, it is not about knowing. It is not about forecasting. It's not about like drawing zones and saying which levels the market is going to tap. It's all about just, again, showing up and waiting for the market to actually guide us where it wants to go and really seeing what it wants to do. So yeah, I do like the shorts from that hourly bearish imbalance, but I would say going short in this recent uptrend with this liquidity target available, maybe it is a little bit risky, honestly. It could turn into something like that a lot of times, right? You see, oh, hourly bearish imbalance, let me go short, boom, invalidated. Why? Well, because we're bullish, okay? And so far we're still bullish. So I would prefer a long scenario, definitely a lot more than the short one, but of course we have to see how it's going to develop. I also spotted we have a lot of NZD news, so watch out for that. All right, gold lovers, let's have a look at gold. So on gold, actually, I'm having a losing week this week. I only took one loss on the PPI day, and then the market just consolidated like crazy. The best day this week on gold was Monday, and I didn't trade on Monday because I'm kind of hesitant to be trading on Mondays, but it was an incredible day. Again, since our forecast here, we have that quality bullish imbalance, the market tapped in, gave us beautiful signs of failure, and pretty much you could have capitalized on all of that push on the 50-minute time frame here. Even a setup from London was provided there. Then we have a setup here, and then we even had a setup here. Some of my community members took at least one of these trades, but I'm kind of really skeptical to be trading on Monday because I know usually it's gonna offer better setups, but then the setup that I took here was on CPI day from a 1 hour zone somewhere here, potentially trying to guide me towards all-time highs, but then it just chop, did nothing. And then, yeah, pretty much we ended up in that consolidation for the rest of the week, which made it extremely untradeable. So only one loss for me on gold this week, which is perfectly fine. It's gonna start offering setups pretty soon, but currently tricky. So let's have a look again, going all the way back to the weekly. We're having another weekly bullish imbalance, again signifying that buyers are absolutely in control. Now, are we gonna pull back into that weekly? Well, we gotta wait and see. Dropping onto the daily time frame, is there something to push price higher from the daily? Yes. We have that daily bullish imbalance that the market tapped candle 1, 2, 3, and it's still compressed kind of. If you look carefully, we're still kind of inside that Wednesday's candle. I think, yeah, we just came very briefly here to sweep it a little bit, right? And then Friday also did nothing. So I can say the market can push higher from that daily zone towards that liquidity, but if it fails to do so and starts giving me bearishness, I will definitely be looking for that weekly zone to tap. I kind of want for that weekly zone to tap because then we're going to unlock very clear targets and a very nice uptrend. While right now, we kind of take all-time highs, pull back a little bit, take all-time highs. It's always tricky to be trading at all-time highs. Then dropping onto the 4-hourly time frame, like this is what I define as a consolidation. Okay, 4-hourly bullish invalidated, 4-hourly bearish invalidated, and right now I have 4-hourly bullish. Okay, is it gonna hold? Is it not? I don't trust it anymore. Why? Because currently we don't have a trend, right? Compare this sort of price action to this long that we said potentially could work out last week. Look at that. We're absolutely bullish. Well, right now the market is kind of a little bit in a compression here. You can see it's probably waiting. Is it waiting for the Fed rate? Is it waiting for something else? I don't know, and I don't care. Okay, but when it comes to right now expectations, I don't have any. Okay, now I can say, all right, these two highs are looking pretty good, although again they're making lower highs, right, even from that high. So some sellers are kicking in. However, if the market really shows me that it wants to break above that high, okay, preferably with an imbalance on 4-hourly or 1-hourly time frame, I will be looking, for example, to be guiding me towards all-time highs. Okay, however, if the market breaks that reaction from this 4-hourly zone, okay, and shows me that, hey, this 4-hourly zone is not gonna hold, then that is gonna mean potentially that this low is weak, and then we can drive all the way towards that low. So then a potential scenario could be something like that. And then what is gonna be happening after this low is taken? Is the market going to impulse lower with imbalances to drive me into the weekly? Is it going to sweep and start driving me into all-time highs? Again, they're like, we don't know. That's the thing, right, guys? We just don't know. So I don't have, again, I don't even have a preference for gold right now. I just don't care. I'm trading gold only for like 3 hours per day. So all I care about is which candle, where this candle is gonna go, the 13 o'clock candle, right? This is what I trade. This is what I bet my money on, okay? So I of course always look at the higher time frames and everything, but what really matters to me is the intra-session development and the low-hanging fruits. Okay, currently I'm going to be looking for a little bit of an introduction of direction, some imbalances to form to see is that hourly and this daily going to actually push price higher, and if it fails, I'm going to be targeting that low. If it holds, I'm going to be targeting all-time highs. Okay, so that is GOAT. Unfortunately, not a clear bias, but of course this is the perfect situation to wait for Monday to play out. So this is kind of my reflection. When Monday is already looking good like that, in a very clear trend, very clear break of structure, very clear imbalance, very clear sign here of that 9 a.m. candle, giving us that massive bullishness, potentially giving us a sign that, hey, the next 4-hour candle can also continue. That was a good day to trade. But currently getting into Monday, looking pretty shit, so I'm skipping and waiting for more price action. USD this week, absolute chop. Now here again, once again, as I keep telling you, we don't know what the market is going to do, so making too many forecasts a lot of times it's not as valuable. You just have to show up and see where the market wants to go, because again here we just opened up with a crazy gap to the upside. Okay, and then this forward imbalance kind of is really relevant, not really, but then look, okay, all you have to do is just wait a little bit. What does the market, first thing that the market does, boom, bearish imbalance. Then you go to the 1-hourly time frame. What do you see the market do? Boom, right? 1-hourly bearish imbalance. What is here? 1-hourly bearish imbalance. What is here? 1-hourly bearish imbalance all the way towards our liquidity objective. Is it hard? It's easy. Okay, I hate to say that trading is easy because it's not, right? The psychological part is hard, and actually giving the time for the market to show you where it wants to go and detaching from your expectations of lines and everything and like needing to know where the market is gonna go next. You really don't. Okay, so basically kind of again the beginning of the week, again Monday into Tuesday was the best, and then since then it just got choppy. So getting into the weekly, like god damn, this looks just so bad. 1 2 3 4 5 6 7 weeks of absolute nonsense here. Daily time frame, absolute nonsense as well. Absolutely crazy. We again came to sweep that low. We swept it, and then what's the next high to sweep? Currently we have this kind of as a low hanging fruit, and then the next high is gonna be that guy. Hourly imbalances, let's see. So I mean this is a consolidation. So we have hourly bearish, failed, hourly bullish right now forming. Am I gonna trust that hourly bullish? Not really. Okay, now if we go right now to a 1-hour time frame, and for example you see the first thing at the weekly open is this 1-hourly zone failing. Okay, then you can potentially look for some sort of a long setup, right? So something like that is what I would imagine maybe on a Monday, on a volatile Monday could happen. Okay, and then apart from that, like of course I can always give you the short scenario. If that hourly bullish imbalance fails, then that is gonna guide us into the other low hanging fruit, which is this low. But again, with we have, I think we also have some JPY. Yeah, we have JPY interest rate this week. This week is absolutely packed, and the market kind of really after that Monday move, and even PPI and CPI didn't do much to the price action. So it's starting to compress a little bit, like especially USD JPY is just absolute crap. So if you're trading like USD JPY, I would say right now is a very good time to kind of step aside. Is it impossible to find trades? Absolutely not. Okay, my community traded that short here, and then here I think there was maybe one stop loss that could have been taken, but you can always find trades. Again, the key question is it a high probability trade? Currently, in terms of the higher time frames, USD JPY is definitely not high probability. So I'm waiting for the market to exit either side here. I don't care, right? I just need to see the market exiting this consolidation, starting to give me clear trend, and then I'm gonna maybe get back to trading it a little bit more. Let's have a quick look at EJ and GJ. So EJ again, like we kind of forecasted maybe shorts into that daily imbalance, but the market gapped up, took buy side liquidity. And then again, if you just wait a little bit more, we didn't get a hourly bearish here. Then the market flushed straight into our liquidity target. And then since then, it just started consolidating. So, I mean, yeah, weekly, nothing on the weekly. We just came in again to take out that liquidity. And then afterwards, we did nothing. Then going on to the daily time frame. Yeah, we pull back into that daily, but right now, is this daily relevant? No, because we have a daily bearish. Now, this daily bearish looks like it actually wants to fail. And we actually have signs of its failure already. In fact, 2 of the signs that I teach in the bootcamp. So we have a hourly bullish. That is going to be our low hanging fruit right here. That is going to be the next target here. and then the ultimate target for the bullish scenarios, there are. Slight bit of a bullishness here. I do like it, even coming from that daily imbalance bullish. If we of course get some more confirmation for long, some more fall imbalances, then we can look for the highs. And of course, if that fall bearish imbalance fails, we can be targeting the low hanging fruit down there. Okay, so those are kind of the two scenarios on Euro yen. Looking at it right now, I will say I like the longs a little bit more. USD JPY is not that long, honestly. This one is also not that long, but I'm working mainly with the failure of that daily bearish imbalance, because according to me, that daily bearish imbalance has failed right now, which means that that can unlock this high and this high. So let's see if I start seeing bullishness here, even going higher. The first thing in, for example, on Monday, you can be looking for the longs, but if it opens up with some crazy gap once again, just wait, give it time. The market is always once again going to show you where it wants to go. GBP JPY, not sure if I would even like to look at it, but of course, let's check it out. Weekly time frame, nothing. Daily time frame, nothing for me personally. Okay, for you, you can find a lot of value within this daily time frame. I find absolutely zero value. I mean, we took out that liquidity, okay, and then we dropped to the forward time frame. We swept this massive liquidity, and right now we're getting this forward bullish imbalance. So do I want to long that one? Maybe not. I mean, you probably could have also found opportunities here, because it gave you that forward bearish, and that forward bearish immediately failed with a forward bullish. That's a long trade here. Then it gave another forward bullish. That's a long trade here. So not bad. We're having some bullishness behind us, but just zoom out a little bit. Like, look at what it's doing. This here, again, the market swept here, reverse. The market swept here, reverse. The market right now is taking in that recent high. It can very easily reverse, very easily. So am I looking for a long trade from here? Absolutely not. I don't trust these JPY pairs, especially right now. I don't trade these crosses. So yeah, but what can I say, right? Either a continuation from here to go higher, or of course, if that forward imbalance fails, you target a low hanging fruit, which in this case is here. And then afterwards, right, this is how I trade low hanging fruits. If this fails, this gets taken. If that holds, this gets taken. And then what happens afterwards, I don't know, and I don't care. I'm just gonna wait to see what happens, and then I'm gonna flow with it. Okay, so that is GJ. I mean, it's a pretty shitty pair according to me, but if you're having success with it, absolutely keep crushing it. All right, welcome to the futures part. We're gonna get started with ES, which is the future index that I'm trading, and I'm having a profitable week this week by only trading Thursday. So Thursday after CPI, the market gave us guidance, so I literally capitalized on two beautiful wins within that candle. This is all I did this week to make above $1,000, right? So yeah, we started up pretty choppy. There is the PPI again, did a little bit of a move here, but again, it developed pretty late for me to trade, and then eventually they ended up taking it out. And then again, chop, and then CPI came in, and finally it gave us an opportunity to capitalize. So let's have a look at the overall top-down analysis. Again, ES, all-time highs. If you remember what I said last week, I was expecting a pullback, okay? But I probably mentioned a couple of times that, again, I'm nobody to be making forecasts, and I don't care where it's gonna go, as long as, of course, I flow with the market. Is there a contract change? Oh, we're changing to on the 16th of September. Okay, we are changing to the December contract pretty soon. Goddamn, time flies. So weekly time frame, very nice expansion. Going on to the daily time frame, we're having a daily bullish imbalance here. Okay, we even have a one all the way down there, but that is not relevant. So this daily bullish imbalance is really nice right now. And I kind of really think that the market could tap it, because we're coming on Friday. We took out that liquidity point, and we very nicely rejected it here in the last hours of the trading session. And this also gave us kind of a 1 hourly bearish imbalance. So this for me here would be looking like a really good short setup, okay, to trade into that daily. And then from that daily, what is going to happen? I don't know. Is it gonna hold and keep us and push towards all-time highs? Is it gonna break and start pushing us towards, let's say, some other liquidity levels all the way down there? We don't know. Okay, the CPI introduced a lot of bullish direction. The sentiment is overall continuing to be pretty bullish, so I'm bullish. Okay, but again, as I keep saying, I only trade gold and ES for kind of around 3 hours, maximum 4 per day. Okay. That's it. And this really keeps my trading to the minimum. So this is why I don't care too much about the long term, too much about where it wants to go, too much about these macro analysis. All I need to do is capitalize on the intra-session volatility. Okay, so that is my kind of, it's not even an outlook on ES. I'm looking for that daily zone to tap, which I definitely think it could tap, because we're not getting a lot of follow throughs here. Like we had that hourly bullish imbalance, that one tapped and did its purpose to take liquidity. So right now, according to me, this low is going to be weak, and then that low is exactly the imbalance open. So when this taps, I'm going to be looking for more signs. Let's see what happens. Well, congratulations, all-time highs on Nasdaq. Finally, I was saying how last week it was kind of lagging behind, and I was like, okay, can we really have a little bit of a dip? But no, the market just continued and created the all-time highs, which kind of looks right now in hindsight, this was probably the main kind of liquidity grab, because the market tried to push higher here to take all-time highs, but then it dipped and it took the liquidity. So then it shifted the structure, and then me saying, hey, it's gonna come for one more liquidity grab. In hindsight right now, it's probably not the best forecast that I could have made, but guess what? Guess what? Right? I'm never married to these scenarios and outlooks and everything, okay? The first thing that the market did, the very first thing within the first kind of 8 hours of the market, full hourly bullish imbalance. Okay, not 5G, and not 4G, 4H. Invalidating that bearish one with a bullish one. Bingo. Who is in control right now? Buyers. Where do we go? Liquidity on top. Taken. Okay, what do we do later on? We continue with the bullish pressure, hourly bullish imbalance taps, and what do we do? Liquidity. Okay, we continue with the bullish pressure. What is this? Hourly bullish imbalance. What do we do? We tap, we continue for the next liquidity. Okay, do I care that I gave a short outlook here? Absolutely not, because I took an ES long, of course, not much on Nasdaq, but if you traded Nasdaq like that, you just flow with the markets and it guided you towards all-time highs without making a prediction. Hey, it's gonna go take out all-time highs, or hey, it's gonna dump. No, you just show up and you flow with it. Now, weekly time frame, pretty nice expansion. Again, taking up the all-time highs. Daily time frame, do we have daily imbalances? Unfortunately not. We have one on ES, which is looking pretty good. ES is kind of relatively stronger, but right now, both of them have created an all-time high, so that's good. And then we drop to the 40 time frame, which is kind of the only time frame that could give us some sort of a zone. And we have this. Now, indices at all-time highs, they're always super tricky because they can start retracing anytime soon. They can start making like one of these big dips. Okay, that was like all-time highs. The market massively dipped. That was all-time high, massively dip. Now we have an all-time high. Are we gonna massively dip again? Again, we just don't know. All right. But of course, we keep showing up and we're following it. Right now, what I can say, well, the market is looking good. We're closing above all-time highs. We're having a flower imbalance above it here. If we pull back, then this is, for example, if it was a regular trading day, let's say a Tuesday, I would absolutely be looking for a setup like that. Bingo. Okay. So that is Nasdaq. Nothing much to say. All-time high is beautiful. We're having a body closure above all-time high is great. Forward time frame is so far bullish. Now, again, if this forward time frame actually fails and starts guiding me lower, oh, guess what? Liquidity number one. That is the low-hanging fruit here, the bearish liquidity. I'm not gonna say, hey, it's gonna go take out all of these lows. Okay, I'm just saying if this forward bullish fails, then I'm gonna trade it towards that low. And when that low fails, when that low gets taken, I don't care. I'm just gonna show up tomorrow and I'm gonna see, right? Is it gonna break below it, or is it going to sweep it and guide me higher? We don't know. Okay, so that is Nasdaq. Not much of a forecast, honestly. So we just have to wait to see how Monday is gonna open and how, of course, the Fed rate is going to impact the stock market. So pretty curious about this week. YM, again, I was expecting some sort of a pullback right here because we're coming from that sweep and I was expecting the low-hanging fruit to be taken. But yeah, unfortunately, the market kind of opened up. It consolidated and it didn't give us a lot of bullish signs here, like no forwardly bullish imbalances. It's kind of choppy, and then it popped higher. And it made this only forwardly bullish imbalance, and actually it kind of did its job because we took out the liquidity and then we came up to take the opposing side and then we rocketed on CPI. So kind of US30, I don't trade this index because it's always different than the rest. Like for example here, we still have all-time highs that are not taken. So are we gonna take them? Well, dropping onto the daily, after this expansion on Thursday, the market immediately invalidated a new daily bullish imbalance. So that is definitely not a great sign. And then dropping onto the forward time frame suddenly, right? While the rest of the indices are bullish, this guy is making here forwardly bearish imbalances. One here as well, which is very tiny, but still it exists. Okay. So pretty strange development. We are tapping into that, for example, zone. We are also having the block here to the left. So there is a lot of support, but of course the market is also coming with a lot of bearish pressure. So what is it going to do? I don't know. And honestly, I don't care because I don't trade YM. I only trade ES. It's kind of the most balanced one, and it's also aligning with Nasdaq, unlike YM, which doesn't align with both of them. So let's see. I don't have a forecast here, right? I mean, it can continue. Like, if it continues short, like I have to call, for example, a level like this, let's say. It seems too far away for me to say, okay, like the market's gonna do this. I have no idea if it's gonna do that. Can we pull back and get a short? We could. The market is still kind of in the bullish market structure. Can we take a long? No, because right now sellers are in control. So the long is gonna be if we tap, react, break, and we start printing the bullishness. That is gonna be the long setup. Okay, and of course the short one, if the market continues to print bearishness, we can be guiding towards the liquidity. That's it. Again, nothing extremely clear that is right now emerging on the horizon. So let's see how it's going to develop and where we can flow with it. Well, DAX 40 looked pretty good, honestly, for a short last week. We had a weekly bearish, we had a daily bearish, and we had a hourly bearish. And I said, okay, very clear setup. But unfortunately, once again, you can see the market open up with a gap. Chop, 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 chop. It came up. It didn't take out this high. It flushed again. It didn't continue. So what a chop. So the weekly candle is very likely looking like a very nice indecisive candle. Yes, there it is. So what is DAX waiting for? I don't know. Daily time frame, it's absolutely chopped up, so nothing really to extract from here. Weekly time frame, we didn't have a weekly bearish imbalance created, so that is not a lot of value here as well. And also quality time frame is just choppy right now. It's pretty directionless. So what I'm gonna say for DAX is just wait. Just wait for the breakout, wait for it to do something, or wait for it to start trending again, because currently there is absolutely nothing to do about it. Alright, let's throw a little bit of a recap here. So DXY, I am bearish bias on the DXY. Structure is bearish and overall order flow is bearish. We have daily bearish, hourly bearish here. So if we start seeing the signs that it wants to go lower, we target liquidity number 1 and liquidity number 2 under that low. But of course, as always, I give you the opposing scenario because you should always think in terms of probabilities. It can go up and it can go down. So you should be prepared for both. Euro USD also pretty bullish. Bullish overall structure. Daily bullish imbalance kind of looking like it wants to pop. Forwardly bullish tapping in, looking like it wants to follow through. So again, the ultimate liquidity targets are these guys. If we truly see the follow through, we can target them. GBP USD, it has a lot of news that are incoming here. This one is also, it doesn't have the daily imbalance that was tapped like EU does. So if it shows me bullishness, we can definitely attack all these liquidity points that are available. I think it's going to be definitely easy for price to take out the buy side liquidity instead of going all the way down. But then again, what is going to happen after we take out these buy side? Are we going to continue higher? Are we going to sweep it, continue lower? And of course, the other scenario is we just start trending lower and we attack liquidity 1, liquidity 2, and then tap into the daily. So let's see. Aussie dollar is interestingly bullish price action this week, but right now we're ending up with a little hourly bearish. We don't have a bullish zone to work with right now, so I would give this one a little bit more time to truly show me which direction he wants to pick. NZUSD kind of the same. It actually already has a hourly bearish imbalance that is being tapped. It also had a very nice bullish week. It also has like a liquidity target to go for here, so I have given quite a few scenarios here. So either break the hourly and attack the liquidity, either hold from the hourly and attack the bearish one, or come into sweep here and tap into this reaction area and give us the longs. So let's see. Gold is extremely unclear. So it's overall absolutely bullish, of course, at all-time highs. We're having a weekly bullish imbalance below us. So if I start seeing bearishness to guide me towards there, I will definitely be short. But of course, if it starts giving me the longs towards all-time highs again, I would long it. The JPYs are super unclear. Like, just zoom out a little bit. USD JPY is absolutely stuck. No idea where it wants to go. I'm just looking for signs. Euro yen looks a little bit more bullish, so I kind of do like it. We had a daily bearish imbalance that is failing with a hourly bullish right now. So if it starts getting higher, it could look good. And then GJ is already taking a lot of liquidity here, so I would be very careful taking a long. And indices, they Nasdaq and ES keep making all-time highs right now. On ES, we have a daily bullish imbalance to potentially pull back into and maybe react from. Nasdaq doesn't have that. It just has a hourly bullish to maybe go long from, or if it fails, we attack the opposing side of the liquidity. YM is super tricky. This one is always tricky. It tends to consolidate a lot, not do anything. The rest of the pairs are taking all-time highs. This one is not taking them, so I definitely think YM is in my view not the best one of the index futures, so I'm not looking into it. And then DAX was extremely choppy this week. So Fanatics, let me know how you performed this week. Let me know what kind of trades you took and how you feel about the market. So let me know what is your main focus for next week as well. If you have any fundamental suggestions for me as well, let me know. Hope you traded well this week and good luck next week, because very likely it could be big.